I do believe that Bitcoin specifically, the outcome is going to be binary. It is either going to become this global currency, this global store of value, this global remittance platform, this global payment system, this global money transfer network, or it's not. And from an investment perspective, it is pretty much the highest risk, highest return investment that you can possibly make, because it's either going to be zero or it's going to be, many times your investment. So from that perspective, when I talk to people about investing in Bitcoin, I really do equate it to an early stage startup company, technology company that maybe we're at the Series B stage from a risk profile perspective, but I got to say I've never been more comfortable from a risk perspective, and I've never been more excited about the upside, based on what I'm seeing from a regulatory perspective, from a Wall Street perspective, and really, there's just a lot of these types of events happening right now. I'm doing dinners, I'm doing breakfasts, I'm doing lunches, and really some of the smartest investors, economists, academics are all coming out really with the general consensus is digital currency is not going away. The infrastructure that it's building is really important. It's going to change our financial system. And then the question specific to Bitcoin is Bitcoin the winner?
So part of my sense is that in order for it to be a currency, it can't become a commodity. So, Todd, what's your sense about Bitcoin as an investment, and what do you hear?
I'll tell you, my initial inclination was that this is digital tulips, and this is the type of thing you see after a 5-year, 170% rally in the market. But the more I spend time and I really try to wrap my head around it, I always try to poke holes in my own investment thesis and my own thinking. And I found myself getting caught up in the semantics between whether it's a currency or a commodity or a payment system. And what I kept arriving back at is, when this was really, when this emerged and there was this real fundamental concern about the Federal Reserve and central banks and fiat currencies, I have a hard time getting in front of or discounting the innovation as really as an opportunity for our society to really emerge and learn from the financial crisis. Now, I feel personally that there's really two risks to Bitcoin in particular. One is, as we saw recently about the disappearance and whether or not there can be any type of inherent hedge. And I was talking to Barry before, if there was an insurance payment, insurance process, or any type of put you could buy against us, I would personally be a lot more comfortable buying Bitcoin and a put and theoretically owning the call option on it as opposed to owning it outright, and I would pay a premium for that. I do think there is going to be utility as an adaptation. I don't claim to know what that adaptation is. I don't know if any of us know what that is, but I do believe that there will be a utility for it. Maybe not in Bitcoin itself, but maybe in the technology adapted across different industries. The second risk, of course, is whether Bitcoin turns out to be Friendster in the analogy of a Facebook, and if the second mover advantage proves to be more beneficial than the first mover advantage. But overall, I feel that there is a lot more to learn for all of us, and there's going to be more opportunities, but don't risk what you can't afford to lose.
Right. So talking about risk, Mark, you've written extensively about Bitcoin and the asset bubble that you think we're in, right, and all the risks that are either coming true or still yet to come.
But what we're seeing now is the coin itself is 50% off from its high from December. So in essence, it does appear as if the bubble has popped and we're sort of at a new lower plateau.
And it goes to, you've predicted, to $10?
Right. I don't know why I'm getting all this notoriety about this. I was interviewed by the Washington Post, and they asked me what I thought, and I view it very much as an option in regard to when you think about Bitcoin. See, Bitcoin itself, it's not a company. You're not buying an entity itself. You're not buying a board. You're not buying a business strategy. You're not buying a balance sheet. What you're buying is a potential, right? And so that's optionality. And my view was, at the start of 2013, the value of Bitcoin was $13. So I think it's very logical to think that possibly it could start the next year, or even by June of this year, drop back down to that optionality, and that is of $10 or less.
Let's talk a little bit about the exchange system, because obviously the problems with Mt. Gox, right, reminds me of sort of penny stocks, where in the old days the spread between bid and ask were very big. You didn't know who the dealer was, you didn't know whether you were getting a fair price. The problem with Mt. Gox and the problem that you're trying to solve with the exchange that you want to start is one where we can maybe eliminate some of the problems around the volatility.
Yeah, so we've been working it's kind of quietly behind the scenes for about a month now to put together a New York-based regulated digital currency exchange in close collaboration with the regulators and a number of the global banks. And so the construct that we're actually working on is something that Wall Street and regulators feel very comfortable with, which is a member-based exchange where you have a hub and spoke model. And so the exchange is the hub, and the spokes are all regulated banks, broker-dealers, MSBs, who, if you want to buy or sell Bitcoin, you go through one of these members. And the exchange itself, we're going to set up a clearing firm. So all transactions will be centrally cleared. We're going to set up what's called an SRO, or a self-regulatory organization, which will provide kind of the governance and oversight of all the exchange activities.
But having the exchange won't necessarily reduce the volatility.
So the existence of exchange, even if it's very well run, itself doesn't. But one of the ideas that we've been working on with some of the banks is actually slowing down the trading of Bitcoin. And we're actually looking to the gold and the FX and the LIBOR model, specifically kind of the gold spot price setting process, where the idea would be, instead of having a 24/7 market, setting the price once, twice, 4 times a day via a more traditional seal bid Dutch auction. So instead of having an exchange that has $50 million that trades all day long, you would have, let's call it 2 auctions with $25 million changing hands. So you get a true view into price discovery. And so if we go that route, intraday volatility is eliminated. Day-to-day volatility is probably going to be the same.
My question would be, if you start to adopt those regulations, those insurances, and all these fail-safes within the system, doesn't that in some ways work as a catch-22 for all the loyalists who were drawn to Bitcoin in the first place because they were, without these transaction fees, there were that to me is
it does that, and it also adds costs. And so, everybody is excited about Bitcoin being free to move around the world, and yeah, it's great. But if you want, like, say for example, you do want to have consumer protection if you spend Bitcoin with a merchant. If the merchant doesn't send you goods, you want to have recourse. And so there will be services layered on top of some of these products that we all go accustomed to, whether it's through credit card payments. That will cost some money. But the good news is, as Mark was talking about, this is a complete new set of rails that's being laid where you don't have to rely upon the existing incumbents, the existing infrastructure. Remittance is going to get completely disrupted. You can now send money anywhere in the world instantaneously. The payment space is going to get disrupted. The movement of money is going to get disrupted. But there will be incremental costs that don't exist today in a well-regulated infrastructure that's being built.
So let me just add one point. So when we talk about risk, risk is the uncertainty of price. So when something has high volatility, what it means, it moves from the mean. Just to give you a sense of how high the volatility is in Bitcoin, since 2009 when Bitcoin, the first Genesis block, was mined, the volatility has ranged between 160% on an annualized basis to a low of roughly 140%. So this is significant volatility and significant risk. Of course, with the risk comes upside. We're aware of that. But what's important, if you compare it to gold, Bitcoin itself from a risk perspective is 7 times more risky than gold, 8 times more risky than S&P, and 15 times more risky than hard currencies such as the US dollar. So in essence, that volatility, that is the challenge for this to be successful.